Hello, welcome. This is Business Breakfast broadcasting live from our studios here in Lagos, the nation's commercial capital. I am Frank Komalape. Here's what's coming up on the program today. Stakeholders in the Nigerian economy fought federal government on the introduction of excise duty of 10 naira per litre on non-alcoholic carbonated and sweetened beverages as government remain resilient in a plan for implementation. A searchlight, therefore, is on the implication of these policy on the economy as stakeholders feed the move mainly to reduction of production output, loss of industry revenue, and job loss. Also coming up on the program, equity market closes first trading week of 2022 on a positive note. Nigeria's manufacturing companies looking up ahead of the fourth quarter earnings. That's the talking point in the second part of the program. You're welcome. It's the first trading day of the week and, of course, the business week. But let's dwell more on the first talking point, which is about the excise duty that is about to be implemented on carbonated drink. But let's dwell on some industry data to help us get a better understanding of the sector and the position currently, with about 1.5 million jobs representing 22.5% share of the entire manufacturing sector in Nigeria. The food and beverage industry is the largest industrial subsector in the country. Industry data shows the food and beverage subsector has generated to the coffers of government about 202 billion naira as VAT in the past 5 years and about 7.3 billion naira as corporate social responsibility. Also, it has created about 1.5 million jobs, both directly and indirectly, according to industry data. But the question is, what are the stakeholders saying about this policy? Let's get to hear or see what they are saying. What are the industry stakeholders saying? That's the big question. Organized labor in the food and beverage sector under the aegis of National Union of Food, Beverages and Tobacco Employees are no bet said implementation of the new levy could cost not less than 15,000 direct and indirect job losses, including cashiers and contract workers. According to Manufacturers Association of Nigeria, MAN, should the excise duties be implemented as planned, the subsector alone stand to lose about 40% of its current sales revenue, which amount to a loss of 1.9 trillion naira annually. Also, the Lagos Chamber of Commerce and Industry, LCCI, is also is also saying that the country, of course, could lose more and more. And it also says that it causes a ripple effect in the economy. The policy, according to organized labor, will push carbonated drinks producers to neighboring countries, as was the case with Dunlop and Nestle. Well, that's the fallout that we may get from that policy should it's implemented. But let's look at the gains and the losses for government. What are the gains really for the government? How much is the government making from this excise duty? Let's get to see that now. It's to generate about 81 billion naira between 2022 and 2025 from the group. And then, according to the report, this amount is not sufficient to compensate the equivalent revenue losses in other taxes from the group, as the government stand to lose up to 197 billion naira in VAT contraction in 5 years. That is to say, if the government goes ahead to implement it, not just that it will be getting 81 billion naira annually, but it's also stand to lose in other areas. The big question, therefore, will be that will the government be able to justify these revenue aspirations at the end of the day? That's the big question. So if you're taking home 81 billion and you're losing about 179 or 197 billion, what's the justification? But that's the big question. We'll explore that in a moment. And if the government is to lose more than its intention, what are realistic measures in place to realize it goes? And then another question is, how ready are consumers to take on the cost transferred to them by operators? And those are some of the issues to be looking at on the show today. But we'll quickly take a break now. When we get back, also be time for serious conversations. We'll be back in a moment. This is Business Breakfast. Just before we get into the conversation, let's take a look at some of the top stories making the rounds now. The Central Bank of Nigeria, CBN, has disclosed that excessive borrowing by the federal government from the CBN's means and ways advances window could impede CBN's monetary policy. The CBN, as the federal government of Nigeria's banker, is mainly in charge of government's banking business, both inside outside Nigeria. It also helps the government cover temporary budget gaps using so-called ways and means advances, which are limited by law. The W&M advances will continue to be available to the federal government to finance deficit up to 5.0% of the previous year's real collected revenue, according to Section 3.2 of the CBN Monetary Credit Foreign Trade and Exchange Policy set of guidelines released in September 2020. Furthermore, the Apex Bank stated that its ultimate goals of monetary policy are basically to control inflation, maintain a healthy balance of payment position in order to safeguard the external value of national currency and promote adequate and sustainable level of economic growth and development. The CBN further said these goals are achieved by controlling money's supply in order to enhance price stability in the economy. Away from there now, the Security and Exchange Commission has stated it will launch a revised version of the 10-year capital market master plan in 2022 to highlight the dynamism of the market and development in financial technology, among others. The Director General, Mr. Lamido Yugoda, will make this known in Abuja, further stated that the Commission will organize a capital market conference where the launch will be done. He expressed confidence that the result of the various initiatives implemented will begin to gradually manifest, boosting development in many aspects of the market. According to him, as the restrictions of COVID-19 and its variants are eased up, the market will witness renewed confidence expected to introduce fresh investment from domestic and foreign investors. And now the federal government has disclosed that it will focus on improving access to power and infrastructure for manufacturers to improve Nigeria's manufacturing capacity in Africa. This was made known by Nigeria's Trade Minister Nii Adebayo in a recent interview monitored in Lagos. He also stated that with Nigeria being 200 million of Africa's 1.3 billion target market, the federal government wants to make Nigeria the most attractive market to do business. The minister said that the major challenge right now is security, and there is the issue of power, and then there is the issue of general infrastructure. He also added that the federal government is doing all it can by engaging the ministry. Well, and that's it for now with the top business stories coming up in a moment after this break. Our focus will be on the introduction of excise duty of 10 naira per litre non-alcoholic carbonated drinks as industry stakeholders kick. Well, we'll take a break now. We'll be back to focus on this. Please stay with us. Thank you for joining us again. This is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. Let's get straight into the conversation now. Stakeholders in the Nigerian economy have faulted the federal government on the introduction of excise duty of 10 naira per litre on non-alcoholic carbonated and sweetened beverages, noting that the move will lead to contraction of production output, loss of industry revenue, and ultimately loss of jobs. Last week, the Minister of Finance, Budget and National Planning, Zainab Ahmed, during the public presentation and breakdown of the 2022 budget, announced the introduction of excise duty of 10 naira per litre on all non-alcoholic, carbonated and sweetened beverages in the country. But just before we get started, let's take a look. Let's make some sense now and take a look at some industry data to help us get a better understanding of the sector position. All right. With about 1.5 million jobs representing 22.5% share representation of the entire manufacturing sector in Nigeria, the food and beverage industry is the largest industrial subsector in the country. Industry data shows the food and beverage subsector has generated to the coffers of government about 202 billion naira VAT in the past 5 years and about 7.3 billion naira as corporate social responsibility. Also, it has created about 1.5 million jobs, both directly and indirectly, according to industry data. But the question is, what are the stakeholders saying? That's the big question. Organized labor in the food and beverage sector under the aegis of National Union of Food, Beverages and Tobacco Employees said implementation of the new levy could cost not less than 15,000 direct and indirect job losses, including casual and contract workers. According to Manufacturers Association of Nigeria, should the excess duties be implemented as planned, the subsector alone stand to lose about 40% of its current sales revenue, which is amounting to a loss of 1.9 trillion naira annually. Also lending his voice is the Lagos Chamber of Commerce and Industry, who says that this will cause a ripple effect in the economy. The policy, according to organized labor, also said it will push carbonated drinks producers to neighboring countries, as was the case with Dunlop and Nestle. But the question is, what are the gains and losses for government? How much would the government generate from this policy? That's the big question. Well, information says, or data shows, that the government is estimated to generate an excise tax of 81 billion naira between 2022 and 2025 from the group. According to a report, this amount is not sufficient to compensate the equivalent revenue losses in other taxes from the group, as the government stand to lose up to 197 billion naira in VAT contractions for about 5 years. Well, the big question is, will the government be able to justify its revenue aspirations of the government by introducing excise duty on carbonated drinks? And if the government is to lose more than its intention or intended, what are realistic measures put in place to realize its goals? And how ready are consumers to take on the cost transfer to them by operators? All right, now let's make sense of this development. Mr. Olusegun Okwande is a chartered accountant and a member of the Chartered Institute of Taxation Nigeria. He joins me now via the telephone. Thank you for finding time to join me on the program.
Thank you very much, Frank. Good morning and Happy New Year.
Yeah, good morning to you.
Our viewers this morning.
Good morning to you and Happy New Year too. All right, let's consider the implication of this excise duty or tax that is where on the economy. What do you think are the implications of this?
Okay, maybe before we go to implication, it will be fine for us to have a little understanding of what excise duty or tax is all about for our viewers to know what it takes before we talk of the implication.
All right.
This excise tax or duty is not a general tax that you levy, but it's being imposed on some specific products, goods and services, which are more or less like tobacco, like alcohol, and a few things that does not have, like a global, it's not a global tax like you do for CIT, company income tax and the other, it's on specific goods. And then what is the motive behind this? At times, you do this to discourage the patronage of some of these things. And because some of those goods are considered as luxury, these taxes are charged so that you can take from the high-end people to compensate for the lower class. So putting that to our viewers, when you now look at the implication of what the federal government is planning to do via the Finance Act 2021, signed by the federal government, by the president, December 21, you discover that charging 10 naira on every liter of carbonated drinks and non-alcoholic drinks, definitely this will be transferred to the consumer, because like I said the other time, it's a form of indirect tax on the populace. And I think the rationale, if I may understand, this is practiced in other climates, but you ask yourself, what is the rationale for them doing it? The rationale is they discover that there are high level of diabetic patients. Take for example in UK, US, and they provide health scheme, they provide health facility, and they discover that if you are spending so much on this, how can we take back from the people? So in another way, it's like if you intend to do this that will cost you this, then be ready to pay the consequence. And the consequence is by making sure that you increase the excise duty. But come to think about it in this climate, do we have as much as this problem of diabetics or sugar-related diseases? It's not that much. And you ask yourself the question, the basic amenities that has to do with the health sector, is it being provided as is obtainable in the other climates? The answer is no. So for us, we have looked at it that this decision by the government is like double taxation. How do I mean? If I pay extra for the consumption of these, I still provide health whatever for myself. If I go to the hospital when I have diabetes, and I pay. It's not that the federal government or the government is making any provision to take care of the health scheme for free. Because that's what is obtainable out there. Because you pay more when you go for those kind of treatment, the federal government, maybe give a discount and reduce the rate. But we don't even have an health scheme structure for the populace. So for me, leaving us with this to say that because the yardstick is that they want to discourage the consumption of this carbonated drink to reduce the diabetic level, and also on the other side increase the revenue. Why are you increasing revenue to the detriment of the populace? That's the question you ask yourself. Because I'm going to pay more and you're increasing the revenue. To do what? The infrastructure is not there. So you discover that for people like us, not really too cool with the decision, but what do you say? Yeah, since the technical team has actually put this to bear, it's also the consumer to prepare for the day ahead in the consumption. Or you discourage yourself and consume more of water rather than you taking a carbonated drink and the sugar, those non-alcoholic drink.
Well, I mean, some Nigerians do not believe that the first reason why the government decide to impose this tax is to reduce the rate of consumption among Nigerians. They believe that it's all about the aspirations of the government to raise more fund. Again, where do we put these? How do we explain this issue of VAT and of course this 10 naira on carbonated drinks? Isn't this a multiplication of taxes?
No, it's not multiplication of taxes. VAT is for the service that you render on some of these things. Why excise duty is imposed on specific. This specific case, like I said, the government is telling you, or people are saying, no, it's because they want to raise revenue. But the government is telling you, I want to make sure that my people live healthier. Everybody have their reason of justified by them on why they are actually doing what they are supposed to do. But go to the question, there are two distinct taxes, of which the other, it's always to discourage the consumption of that particular, because as we have it as they are introducing it in non-carbonated drink, we also have it for alcohol, for cigarettes, so that it can discourage people from consuming it. And if you have to do, you are doing that at your detriment, with the provision that if anything goes wrong, you pay more to get the trouble of diabetes, and at the same time, go and take care of yourself when the chips are down. So, on whether VAT and excise duty, duplication or multiplication of things, not, there are two distinct tax that we need to just separate on its own.
Because one would think that whether it is enough reason for the government to impose tax because they want to reduce the rate of consumption. But let's look at how much of this cost do you think will be transferred to the consumer, and are they ready to pay for this cost?
Yeah, well, I think the Manufacturing Association of Nigeria is already raising the eyebrow, in as much as I know they will not want to transfer the whole 100,000. There is something that is involved between the manufacturer or producer and the consumer. But take it or leave it, let's even say 70-30. 70 to the consumer and 30 to the manufacturer. You discover that on its own will increase the baseline of every organization that is into this business. And what does that transfer to? If you cannot cope and with the level of some of those delivery, you go to the area of reducing your staff strength in order for you to cope with the services. Because whether you like it or not, as soon as this is increased, the demand for that product will go down. Because as we speak, the purchasing power of an average Nigerian is not where we should be. And if you want to think of any other thing, it's not carbonated drink or this that you want. You would rather prefer to even take ordinary water. So the implication is huge. But as the federal government has taken the decision, I'm sure it's going to be the producers preparing for hard time, as the Manufacturing Association are already yarning that this will affect their the turnover. It's going to affect employment, and I'm sure if they have thought it deep why they are taking the decision, or make a wide consultation with the stakeholder, then this wouldn't have come to bear. But it has come. It's also prepare and see the way forward.
Now, but with this imposition of tax, as to drive home now, what is likely to change in the consumption pattern of these carbonated drinks in the days ahead, should the government goes ahead to implement this plan?
Yeah, well, it's not if they should go ahead. The thing actually took effect from January 1st, the Finance Act. So the implication or the impact is that the consumption will go down. If you look at it, if you now need to buy 5 liter, you have additional maybe 50, 100 naira, to some of these products. And if you are buying in large quantity, definitely the demand will reduce, at least for a start. Because anything that will affect the purchasing power of an average citizen, they are always throwing caution to it. So you might see people avoiding. As we speak, people don't even know the in-depth of what this will be on the product until we start saying it. But you trust an average Nigerian, there's always this reactionary stuff to every policy like this. And you see the demand for such products as we proceed going down. Maybe on the long run, people might now balance the act, but definitely it will affect the manufacturer and it will turn on them. And I think that's why MAN is asking that this particular policy is anti-progressive and it will not make the economy to grow for those organizations in that sector.
Well, I think we should leave it there. Thank you so much, Mr. Olusegun Okwande, a chartered accountant. Thank you for joining us on Business Breakfast.
Thank you very much, Frank, for having me. The best of the day.
And you too. Still to come on Business Breakfast, equity prices on the Nigerian exchange closed higher in the first trading week of the year as market capitalization increased by around 130.75 billion naira to 23.67 trillion naira in terms of capitalization. Well, after the break, Ambrose Omodian joins us for more. Please stay with us.
Cleaners Limited, professional dry cleaners, best in dry cleaning and laundry services that meets the needs of our consumers. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Yeah. Swift Dry Cleaners Limited. Yeah, for clean wash and quick delivery. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. For clean wash and quick delivery. Ooh.
Swift Dry Cleaners. Clean wash, quick delivery.
Mama. Glad to have you back. Now, this is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. All right, in the second part of our focus now is now on the equities market and the performance of the market since the beginning of the year. The first trading day, the equity prices on the Nigerian exchange closed higher in the first trading week of the year amid rekindled investors' buying interest and the expected fourth quarter unaudited accounts and demand for Buafu PLC, which was listed on the NGX on Wednesday last week. The key performance of the NGX had also been bullish over the week there. But the performance for the week went straight 4 days with the 4 trading sections after Monday's holiday to celebrate the new year, thereby extending the positive sentiment of the last trading week of 2021 to the first trading of the year when it recorded about 0.46% on Tuesday. Well, this trend was sustained at the midweek Thursday and Friday, with the index rallying by about 1.05%, 0.30% and 0.60% respectively, bringing the week's total gain to 2.66%. So you can see year to date till now has grown. The market has grown to about 2.66% compared to the previous week gain of 1.07%. So let's put perspective now. Of course, ahead of the fourth quarter earnings, the manufacturing sector is looking up, and we're seeing a bit of investors' appetite and sentiment being tilted towards the consumer goods. So we'll be looking at that in a moment. Ambrose Omodian joins us now to look at that. He is the Chief Research Officer, Invest Data Consulting Limited. He joins me live here in the studio. Thank you for joining us again.
Thank you for
Mr.
having
Ambrose.
me again. Yeah.
Yes, I want us to look at the week in perspective now, or in retrospect, or in review, as you prefer to put it.
Yeah.
The first trading week was positive. Now, what would you likely attribute these positive sentiment we're seeing in the market?
Actually, I would say that the first trading week of the year, starting on a positive note, is a good thing for the market. After the last month of the year, December, closed negative, and that would be like almost for a straight 5 years, and we're just seeing December closing negative. The Santa Claus expectation in December was a kind of the fighting was not in the market. That's all about. we're seeing that end of the year window dressing have been extended into the first trading week of the year. Why? Because January in Nigeria market have shown to be another month to watch, because before the effect of January has been up and down because of people say there's a, but now there's a kind of a positive sentiment coming with January, because before now, I've said it earlier in this program, we don't see Q4 on a account, it start coming. That also give kind of momentum to the market for me. And also don't forget that we're also expecting some economic data to come. And we've seen that for the for the last year 2021, most of the economic data that came from the month of almost July to December are positive data, and I expect that also will continue in this month of January. I expect that we're expecting the consumer price index for December, and that also we're looking at the budget has been released. I've been signed into law, and that also is guiding investor which sector of the economy the government going to spend more, and that we see that people are trying to reposition their portfolio to suit all these expectations. Also, don't forget that the year ended December 31st. We're expecting to see the audited account of this company from this first quarter of the year. That means anywhere from this January, we'll start seeing this number. Then why dividend will start coming again? And in Nigeria, this first quarter is the earning, the most earnings. What I put in is the most quarter or the peak of earnings in Nigeria. Let me use that language, because here most companies that are listed on the exchange, they are more than 80%, and they release the result in this period, this first quarter, and they come with reward in terms of dividend. That alone also is the guiding most of the institutional investors. Despite that most of them have not resumed where to put the money now that we're expecting dividend, and also at the end they are looking at what is happening in the fixed income market, where we see that despite that the inflation is declining almost around 15.4, is still most of the returns in the fixed income market still remain negative, despite they are saying they are up by 12%, but because it's below inflation, that means its real return is what negative. These are what people are balancing to see. If we can make shorter return in equity market in less than 6 months, I make 10%, 15%, it's better they move more.
So what you are saying is that we're likely to witness more capital inflow into the equities market than what is happening
and also
in the fixed market.
Because of any season, go and check the any season in Nigeria, anywhere in the world, during any season, more activity in terms of inflow, in terms of activity, in terms of demand is always associated with any season, and already entering that any season gradually. For me, I see that the market might likely maintain this momentum. And don't forget that the market touched about 44,602. 44,602 before it pulled back, and also market has formed another V shape now, looking up again to tell you that this recovering will be sustained in the market, and it's been sustained for why I think investors should smile, because I see market breaking out the last resistance level of 44,000
and above.
Yeah.
But let's look at some top gainers and top losers, or will I say top decliners for the week. You have the like of cornerstones. The top gainers, you have the likes of BUA, which went up about 9.92%.
Yes.
I'm sure we should have that on our screen any moment from now to show you some of the top gainers and top losers for, in the market last week. You have, like in terms of sector performances, you have all of that there. But let's look at, for you, now, which one was the most value stock and why?
No, if you look at the top gainers for the week, I'll tell you, they're highly dominated by low cap stocks. I call them Kobo stock. I think only stock that I see that is meaningful to me or archive stock is just the BUA food that just recorded about 33% for the week. But others that recorded 2018, they are low cap stocks. It tells you that investors are really repositioning their portfolio, but most of these medium and the blue chip stocks is where they are looking at, and because they are just buying in, we have not seen much return for the first trading week of the year. But I believe that subsequently going into this month, we'll see more position taken in those dividend paying stock and the blue chips company that will reflect on it. But for me, BUA being a new listed food company, the demand is still there. And you can see that the price is still going up because there is a positive sentiment for the stock. For me, it's a good one for BUA food. But I also advise investors, now the stock are recorded almost 40% from Wednesday listed to date. I think this time we should start thinking of how can you take profit, because most things that when this stock is on a high bid now, yes, you might get it, might not get, but for those that are lucky to get it on the first trading day that it was listed, I think you should not be greedy in the market. That's why I said this is not the time we're looking at 100% return in the market, because market is just recovering and it's just the start of the year. If you have made good 40%, 30% for your first trading week for the year, it's a good business for you to start taking your profit, unless you're a long-term investor that want to stay with BUA. Yes, we know that food business anywhere in the world is a good business to actually, but when there is policy...
Just a moment, because I was going to ask you, BUA because Boa Food, the shares of Boa Food seems to have taken the shine off others, shares in the market. But this money that has been raised via this listing, where do you think they are going to channel it to, and why?
No, this is a listing. It's not that
because you expect the money generated or the money raised from these should be put into something in form of expansionary plan.
Actually, they are not raising new fund with this. They are listing. This is listing by introduction. They're not bringing the state for people to have access to trade it on the exchange. It will tell you that, okay, bringing it to the value of the stock might also influence the situation for people who want to invest. Not that the company is raising additional fund from this listing. It's just for you and I to have access. Before, it's just people that have access to the stock. It's not
what I mean is that this will impact on their bottom line.
Right? No. The price movement on equity does not change your bottom line. It is your own, the bottom line of the company that change the price. It's not the price. What I'm saying that the kind of what I'm saying here that this is going to add more credibility to Boa Food, and at the same time, it's going to boost market capitalization. Also, the shareholders in that company, their what has also increased. For example, now if
more likely the investors are the ones benefiting
from this.
Basically, from this list.
But the good thing is that the name Boa Food now registered that it's a listed company, more transparent. Now, when I start seeing their earnings as at when we do analysis, when companies are listed on the exchange, it's one of the things that attract people to them. They become more transparent. You can see what they are doing. But when the company is still either public but not listed, to have access to their data, it's so difficult. But when they are listed like this, because it's part of pre-listing requirements for any company, you must send your earnings, anything that's happening in the company, to the public to know than before when you are a private or anything you call yourself. But now a public company, even though when you are going to check anything, the public must know that what you are doing. For me, it makes Boa more transparent with the listing, and also add value to people that are shareholders of Boa.
I want us to look at, away from Boa now, Boa's Food, and look at some of the third quarter earnings position of the Nigerian manufacturing companies. Of course, Boa is in that subsector and all of that. But let's look at, for instance, we've seen earnings from these companies, and it's boosting that sector, particularly those who are particularly in the food subsector. You have the flour mills there, you have the Nestle there, you have Dangote Sugar, you have Unilever, you have Okomo Oil. Now, where do you think, because now you said earlier that because of the inflation, even though it's around 15%, yet the return on fixed income is still very negative. So among all of these shares, I'm not asking you to pick one out now, but where is the equity, or what you call capital, likely to flow into in the coming weeks, and what's the way forward in terms of chart and chart analysis and all of that?
No, looking at the market generally, as the Q3 numbers has given investor insight where this company are going, because I've seen that for 2021. I'll tell you that most of the listed companies on the exchange posted a positive number, which is good for the market. It tells you that those numbers will support your payout, because I that you don't give what you don't have. If you are posting positive number, your investors will look forward that yes, at the end of the year they should get dividend from you. But if you are posting a number that is not positive, that is negative, they don't expect it. But now we have seen that most of the food and beverage companies or manufacturing companies in Nigeria have posted positive number. It's a sign that we expect dividend from them. But what matters at this point that investors will look at what is the dividend yield for in this sector. What the dividend, and if you just stock like Nestle, yes, they are considering the dividend payment, but dividend is very small because of what the price is high. They look at stock like Dangote Sugar. You can see that the dividend in that stock now is even better in that industry because of what the price is relatively low, and also we know the worth of the company. For me, investors are looking at where can I make money, but those companies that are consistent in dividend payment is where funds are likely to flow to. Stock like I know that for Flour Mill, we're just expecting their third quarter to come. For Boa, we just see their 11-month account. But for those that are December year end, like this Boa, we see that at the end of this at the end of December, they now work to have their full 12-month account. That means we likely also see it when we're expecting more audited in this first quarter. But with the number we're seeing now, as an investor, this number should guide you where I should put my money. You see that any per share for Boa around the 4 naira 38 kobo, that of the Nestle around the 40 something naira. But what's the price of Nestle? You do that when you look at which one will pay me dividend that will be more committed to the price, that I will get more value. That's why I said investors are looking at where they see consistent dividend payout from these companies, and also looking at those that are likely to grow their payout this time. Because the number you are seeing, they will tell you if they surpass their performance as at full year, that means the Q3 will give you an insight what they are likely to pay at the end of the year. For me, the for 2021, the sector is looking good. But we are looking at this year, if eventually they increase, they remove the subsidy, inflation might also bounce back up and start skyrocketing again. That also might affect
before you give us a chart into, what is likely to play out in the coming weeks in terms of activities and where sentiments of investors is
likely to look at.
But let's look at Nestle. Beg your pardon, not Nestle now. Nigerian breweries, which plays
on the food
in the food subsector, and of course with the policy of the government to impose about 10 naira tax on carbonated drinks. How are investors reacting to this, and more importantly, how is those playing in that sector, for instance, Nigerian breweries, reacting to that news?
Yeah, actually,
and what it means for the sector, we'll have to talk about that.
Yeah, for me, anywhere, tax is going to impact their bottom line at the end of the day, because government will take from what they are making, fine. But as a company, you're always going to play flexible with all these policies to know where you are. If Nigeria breweries have done full backward integration in Nigeria, that means they are not importing more of their raw material to Nigeria, because if they are importing with high this exchange rate, also government is starting that means at the end of it, it's going to hit their bottom line. Or if there's way they can play around it, they can also, but only that most I don't discuss more on Nigeria breweries or any brewery companies because of their nature. But leave of course on the air, I believe that should play out. But for me, other companies that are there, investors should look at, I believe, yes, inflation might slow down the consumption of food, but I tell you, because food is essential, if you are eating, let's say, for example, 4 bags of rice before, if there's no kind of little austerity there, you can reduce it to 3. That means, so that is only about food is essential. That's why the food sector, that's why the economy is in recession and everything. See, there's activities there because people have to take care of their tummy and all the stuff. That means as an investor, if you are thinking long term, you can look the role of food because it's a consistent business that we need to look at. But for me, I see potential in some of the stock there that will guide investors. Especially look at the numbers, Q3 number, that will give you a guide. But if you really want to get stock to buy on this thing, you can really mutual investor that will have a product that give you stock to buy on a weekly and a monthly and 6 months on 1 year basis to guide you. But for now, I believe that those sectors are giving us what is going to happen at the end of the year. Now that we see that majority of the company that has the December as year end. Give
us your price movement and analysis for the market as you have to go. I know you have that prepared already on the chart.
Yeah, actually, I'll tell you that the sentiment in the market for equity is on a positive rise, because for the week order review, we saw 100% buy volume. That means the investors are looking at what equity now, especially supported by the kind of sentiment we are seeing in BUA, and also what those dividend paying stock at the end of the year. You can see, look at the index that gained during the week. See that you saw that banking sector index was about 0.78, while the oil sector was about 2.56. Tells you that these are areas we are looking at opportunity, because we are saying that going forward, I think that these banks are consistent in dividend payment, and for that, and also the oil sector where people are thinking now, because one, crude oil price have bounced back to above $80. It's a plus for the industry and the economy. These are things that are guiding investors to the position at this moment. But if you look at the trend line here, it says that the market is purely still bullish. For me, it's a good thing that the market is on a strong run. You can see this straightforward because the price action or index action is above the trend line. It tells you that the market is strong. And don't forget that market touched around 44,062 and pull back, then and form a strong support level around this point of 42. Now it's coming back again powerfully. That means if the market break out the recent resistance level, which is at this point here, that tells you that the market is likely to break out what the last resistance level of 44, and that market will targeting around what 45,000. That is the peak here. Down here, let me just make this so that you can see what I'm saying. That alone should guide you as an investor what you should do at this point. That if the market is looking at breaking out this 2018, that the market January touched around 45,000 index. Now market is already heading to break out the recent resistance level at this point. Once you break this out, we'll see a strong run. And don't forget that we said January as we expect more unaudited accounts to hit the market. Once they start hitting the market and confirm the direction of this company, that will add momentum to the market. You can see that the chart is very, very positive for the market. It tells you that you should not panic if you're in the market, because market has formed already a V shape in the last trading weeks of this year first year and the previous week of the last week of 2021. For that, you don't need to panic in the market. We are seeing a good shape, and when you see this kind of shape in the market, in your chart, it tells you where the market is going. And also your MACD is very, very strong at this point to give you a guide. You can see that MACD is also trying to also reverse up on on the weekly chart. This market is still bullish. You can see this is a bullish MACD because it has not crossed down and market is still looking up. You can see that the red one have closed the blue one from down. Tells you that this market is going somewhere from this point. You don't need to panic in the market at all, but rather tilt your position, because the chart and the sentiment in the market are moving in the same direction. Also, we're expecting positive earnings, and we have seen positive sentiment in the market. When we are seeing this to the market, a positive chart, positive earnings, and positive what? No fundamental. This tells you that market is going to react. So as an investor, you look at a stock that is having an upright rally in price, earnings is going up, volume traded is going up, sentiment is going up. These 4 key points should guide you as an investor what to do at this point. Sentiment is up, fundamental is up, price is up, and volume is up. Once you are seeing these 4 points on the stock or any sector, tell you that is where to be at this point, especially if you're a trader. For those that are long-term investors, yes, your target might be dividend and earnings. But for we that are traders, we combine both the dividend, the fundamental and technical to know where to be at the right time, so you can take advantage of the market. That is why chart is very important for you at any time to know what to do, especially if you're a trader in the market. That is why you must know how to combine these 2 analyses, your fundamental and technical, at any time in the market to know where you are standing.
Last week, the banking sector, seems to dominate the market, trailing behind the Boas, Food PLC. You have Wema Bank amongst the top traded, volume, stock by volume. You also have, top traded by value as well. You also have the banking sector there. Zenith Bank is there. You also have GTCO company there in that particular order. So which of the sectors do you think we're likely to see dominating the market in the next in the
new week? We'll see. I expect what we call profit taking in this week. That means I expect a mixed market this week, because market have rallied for the first trading week of the year to close positive 2.66, and some stocks have rallied, especially those low cap stocks and some dividend paying stock. There might be little profit taking, but because there's earnings ahead, if the earnings start hitting the market from this week, you must also add momentum, but expect a mixed performance. But the good thing is that you see market having mixed performance and a little pullback. That pullback is for you as an investor to take position. Like your question, for me, the sector that I want to look at it now is look at the telecom sector, look at the banking sector, because in history of Nigeria market, we see that the most consistent sector that pay dividend out every year is the banking sector, followed by the consumer, then telecom is a new one on the exchange. But since they came, we are seeing that they are consistent in their dividend payments, especially MTN, and they are paying dividend. Then also the oil sector now, we are seeing what's expected to kind of support their bottom line at the end of the day to boost their cash flow. That is where we're looking at. Also, don't forget to look at the industrial sector, because as far that we're having this infrastructure gap in Nigeria, that means there'll be kind of that drive to develop the nation in terms of infrastructure. There will be demand for that. That's why Boa Cement, WAPCO, Dangote, they also dividend paying stock, and the sector they operate in. These are the sector that you should position yourself ahead of their numbers. Now that we have seen their Q3 number, who we are going to discuss subsequently in this program, we'll be looking at the sector by sector, telling you the numbers you are likely to expect at the end of the day. I believe that full year result will shape the market between this first quarter and the end of March 31st. That is the place to invest. But I believe that this Q1 also, January the 1st, is likely to also to close positive, depending on activities after the MPC meeting. But I believe that the MPC meeting that is coming this month, we don't expect any adjustment in terms of rate, because
I was going to ask you that, should we expect any adjustment in the current rate that we have?
No, we don't need to adjust anything now, because we're still fighting Omicron virus now. They don't know how it's going to affect this economy. That's why they're trying to show some of a resilience and all those stuff. But we believe that CBN, in their wisdom, or their MPC members should not temper with the rate now, because if you really want to sustain the recovery, that's why we're saying that it's still fragile. It's not the time to you to kind of go there and deflate the recovery we are seeing. For me,
I know the Nigerian market is not independent of the other global market when you talk about equities market as well. But when you look at the impact of the Omicron variant in the global market, on the global scene, where, I mean, a lot of people are saying we're not likely to see that impact in Africa. How much of that impact do you think that can have on the market?
I think it will have impact on the market if the economy is closed down again. Which I think that no government in Africa is likely to close down the economy for Omicron virus also for, because now we have seen little of vaccination, the role is playing in the economy, and also intervention here and there by government. Only that we're encouraging more Nigerians to go and vaccinate, so that we know that yes, we are really we're trying to resist the so-called variant and so-called virus. For me, this will not affect much on the body, rather because of some measures it's on the ground. I can see that even with the Omicron, the flights are still flying. But when the first COVID-19 breakout, you see everywhere was closed. But I don't see many economy in the Africa region here closing down the economy, because it's going to affect them. We have seen the impact when they tried to close, but now they are seeing recovery and they can manage it. I think there's no need of closing the economy because of the
Let's
virus.
try to drive home now. Will the market still earn in the positive territory at the end of the week? Your outlook for the week?
But for me, I said earlier that my outlook is still a missed outlook for the market, because profit taking is likely to take place within this week. And if numbers start rolling in the unaudited account, we are seeing that it's going to also add momentum to the market. For that, I see a missed performance, for the week. But as an investor, if you are those company that has good fundamentals and we expect a dividend and they are concerned, you don't need to panic whether the market is oscillating or kind of having some volatility. You don't need to panic. Hold your position, rather watch your volume, watch your price direction. This will guide you to see if you're a trader like me, you don't need to panic because market is shaking. Rather have a support level, we'll call it a support level or a stop loss that will guide you whether you should sell off your position or not. There's no need of you panicking in the market, because the market is always there to make money for those that know how to design, and those that want to sell. Buyers are already in the market. For me, our market is good at this because it's still positive and looking good.
I think we need to leave it there. Thank you so much, Ambrose Omodian, Chief Research Officer, Investate Consulting Limited. Thank you for coming on the program.
Thanks.
All right, you're still watching Business Breakfast. We take a moment now. We'll be back for more. Please stay with us. watching Business Breakfast, coming to you live from our studios here in Lagos. Let's take a look at the global oil market now. Prices continue to gain ground above $80 per barrel on Friday, helped by a growing consensus that demand remains surprisingly resilient to the current Omicron-led wave of COVID-19 cases, which sparked markets in late 2021. Brent crude futures, which traded close to $83 per barrel earlier on Friday, had fully recovered from the end of November sell-off over initial Omicron fears, with OPEC Plus boosting oil output for a 7th consecutive month amid waning fears that the variant will trigger large-scale lockdowns. S&P Global Platts reported that the hospitalization levels in many countries with high vaccination rates continue to lag well behind soaring infection rates and the head of a bit of commodities there. Well, and that's what much we can take today on today's program. Many thanks for watching. It's the first day of the trading week, and thanks for your time on the program. We'll be back again tomorrow. I am Frank Omalape. I'll see you again.